Hello and welcome to another trading video by me. I hope you're doing good. I hope you had an amazing trading week. I did myself. Took two trades, no, three trades. One was just a small loss. So this video is going to be a recap of all those three trades. I took one on Wednesday, this small loss on Thursday, and then on Friday took another setup, which ended up being a winner. So Wednesday and Friday's trades were winners. So yeah, this is going to be a recap video. I hope you will learn something. And without much further ado, let's get straight into it. So in the beginning, as always, I usually start from my economic calendar, look at what news events are upcoming in that trading week. So for this trading week, um, I am looking for the big three. If I do not get those big three news events, then that trading week becomes clean. I mean, I do not need to skip a day except Monday. So this was one of those weeks where it was so clean, I didn't need to skip any day except for Monday. As you can see, these are just the meeting minutes. This is not the press conference for FOMC. The only big news event that I saw this week was this Fed Chair Powell speaks and Jackson Hole Symposium. So I think this was just one thing. It's a big deal. It was a big deal kind of news because this is basically the Fed Chair Powell was speaking at the Jackson Hole Symposium. This is an event, an annual event that occurs one yearly, where stakeholders from around the world, including central bank governors, meet at a place called Jackson Hole, and they discuss about interest rates and everything that affects the United States economy, plus the economies of of different countries in the world. So it's a big, kind of like a big deal, but I don't really categorize it under my big three. So there was no need for me skipping on Thursday. So yeah, that was it. So since I have that out of the way, let's get straight into the trade I took on Wednesday. So as always, again, I usually start from my daily time frame. I want to, first of all, before I even predict where price is most likely to go next, I need to first of all figure out what price has already done. So on a daily time frame, this is where I want to get my daily bias. Where is the next daily candle going to print to? In what direction? So from this presentation over here, you can see I've annotated a couple of things and I'll go through them very fast. We have this low to this high. This becomes a type 1 stroke type 2 dealing range. Why stroke type 2, type 1? Because I do not know if we want to move all the way, if this is a reversal dealing range or this is just a continuation. The more price will print, the more I'll get that information. That is why I was categorizing it as a type 1 stroke type 2. So anyway, this is Monday's candle, Tuesday. So this is Wednesday as it was printing. This here is a daily fair value gap. We have an SMT here that I've marked. This is an SMT between there's this high, I think, to Friday's high. On ES, we had taken that out. So that becomes SMT. So this is on NASDAQ. Okay. So with this information, and then we have the change in state of delivery right here where Tuesday closed below this up close candle. So with this information, what kind of bias am I going to be looking at going into the week, going into Wednesday? One thing you should know is the more you sit on your hands and let price do the heavy lifting, the more it becomes easier to trade because it gives you more and more information. For example, how Tuesday printed here gave me more information to what I should expect on Wednesday. How or what was that information? We had the change in state of delivery on a daily time frame. So that is a confirmation, that is a very key confirmation, a tool to tell me that most likely we are now, the algorithm wants to now reprice lower. So what does this become? This becomes a market maker sell model. What else can I pair with that change in state of delivery to even give me more confluence? You see the SMT at the top? That is what we call in more advanced or ICT concept, we call that smart money reversal. So that reversal you need to see before. That is one of the key elements that you need to see to confirm to you that the algorithm has switched gears um, from offering buy side and now wants to offer sell side. Okay, so that is key information that you should look into. Another thing is we closed below the 75 DRT level, and then we left a fair value gap, as you will see uh, in a later slide. So that fair value gap, which is right here. So I switched uh, from this becoming the 75 to the 25 because now I'm looking at this as a reversal dealing range. Okay, so assume that this hasn't happened. This from Thursday going into Friday, this hasn't happened. So we are here at Wednesday, even this hasn't printed. So this is what I want to go into. So the fair value gap that I'm talking about that was left was this one over here, between here to here. This is that fair value gap. In a more technical or advanced term, we call that a breakaway gap. So that is more information. And if you calibrate that breakaway gap, you will see that the change in state of delivery on a daily time frame is literally or is in close proximity aligning with the consequent encroachment of that fair value gap. Another thing is you see how we closed this daily fair value gap over here. Once we opened on Wednesday, we literally just like closed below it. So now this becomes an inverse fair value gap. This is now shifting my adding even more confluence to an idea I already have. So it's actually ticking more boxes. Okay. So you will see how much more this inverse fair value gap becomes. It becomes so much source of so much it becomes such a source of information going into Wednesday's trade. So before we get into that, I need to um, identify some things that I've plotted here just to get you on board. So the first thing I have is this change in state of delivery on a 4 hour on this side. This series of down close candles, all this. So we have this series of down close candles. Once we close above this becomes a change in state on a 4 hour, or this becomes a 4 hour order block. We also have this series of down close candles over here. Once we close past this becomes a propulsion block as I've annotated here. So I want to annotate the opening price and extend it to the left, the midpoint to the left, the propulsion block discount low to the left. Again, I want to calibrate the midpoint of this 4 hour order block over here. The midpoint, I also want to calibrate it to the left and label it. So I want us to study how price interacted to those levels and how we could have used those levels as sources of information and also price targets going into Wednesday. That is the whole idea of why I marked them. Okay, so first of all, let's start with the 4 hour order block midpoint. So once we had this movement to the upside and then we came back and retested or reclaimed this order block, this now becomes a propulsion block. That is why I've named this as a propulsion block. So once we closed above this becomes a propulsion block. So look at how we are interacting with that midpoint of that 4 hour order block. That is information that will give you more information that yeah, now this is a buy program that we are into, but that is something that passed. So I want you to look at how that midpoint is literally aligning with the 75 dealing range level over here. Again, look at how it is in close proximity to the premier discount low of that propulsion block. That is information. This is how you gauge order flow. This is how you gauge order flow correctly using ICT concepts and plus dealing range theory. Okay, now someone will ask me why have I plotted from this low to this high instead of this one. This is just me refining my dealing range. You can have it at this high, but I'm looking at this high as the true high because on ES, this is where it was taken. This high was taken. So this becomes a true high. So this is where I'm going to get more information. Okay. But that shouldn't bother you that much. You can still have it at this high over here. So now that we have I have explained all the purpose of all these things that I've annotated here. Now let's get into what really happened on Wednesday. So before we get here, let me just talk a little bit about this price action here. So on Wednesday, going into Wednesday, what is my bias? What do I want to see price do? How do I want to see that daily candle print? My bias is bearish because of the so many confluences that I've just listed there. Now, what do I need to see before we go down? What do I need to see? I need to see us first of all manipulate, or I need to see us go up. That is a general rule you'll use with ICT concepts. Before you go down, you have to go up. Before you go up, you have to go down. So that going down and up is just manipulation, in short. So where do I need to see this manipulation happen? This is where I usually talk about profiles. Those Asia, London sessions and New York sessions, they are going to be really, really important for you to figure out where your low or high of day is forming, depending on the bias you have at hand. So now, before we head into that other slide, I want us to talk about how this was a key source of information, the inverse fair value gap. Because once we closed below it, this is now Wednesday printing. Look at how just from this what do we call this? From this time frame, look at how we literally just nailed the 4 hour the midpoint or the consequent encroachment of that fair value or inverse fair value gap. That is more information. If you already traded past a fair value gap, we rebalance we literally rebalance that inefficiency. When we revisit it back, there are levels to that now inverse fair value gap that we need to see hold price or provide support as we look for setups to the downside. Okay, so now this is now where it brings us to this. So this is that daily inverse fair value gap. Remember, I'm looking for a confirmation to now go lower. So what is that confirmation that I'm looking for? I said I'm going to be looking at how my profiles are going to be printing. Ideally, before I go down, I need to see price go up first. I need to see a form of manipulation. Where that manipulation forms is ideally during London or the New York session. Okay, so if it doesn't give me during London, I am going to look for it in the New York session. So in this example, you can see this low over here. This is around London session, but it hasn't really opened, but it's just before we open at 2. So this low that is giving me here at London, this disqualifies what I need to see, because I need to see a high before I see I need to see a high. I do not want to see a low. So this tells me that, okay, London has disqualified that information. What do I need to do next? I need to sit on my hands more and wait for New York to probably give me where that high will be formed. Okay, so that is where I sit on my hands. Now, um, look at how uh, the this is where now New York now begins to open at around 6, 7, 8:30 right there. That is where now New York begins to open. Look at how the consequent encroachment, we respect that consequent encroachment level. Again, for more confluence, if I plot a dealing range from this high to this low and calibrate those levels, this becomes a type 1 dealing range. What do I need to see on a type 1 dealing range? I need to see a scam back, depending on where I'm looking for price to go on that day. If I'm looking for price to go lower, the fact that I'm saying I need to see price go higher, the dealing range levels will give me where I need to see price touch. And what are these areas? I need to see price come back at least to equilibrium or the extreme premium level of that dealing range. Look at how we literally nail the 75 DRT level. Okay, something else, but this is just for a by the way. You see how you see these up close candles over here. This becomes an order block. If you extend that order block to the upside to the left, look at how that price level is uh, in close proximity to the premium high of that inverse fair value gap. And then look at how the bodies are refusing to close past the premium high of that inverse fair value gap. That is information. That is what you call information, and that is how you align confluences again and again and again. But that could be too advanced. So let us just focus on this. So once I see that we are rejecting off this 75 dealing range level, the consequent encroachment of that inverse fair value gap, and then we get the change in state of delivery after we close back below this up close candles. That is now giving me more confluence, more feedback. So this is way before, but I need to wait and see for more. I need to wait, and I need to wait for 9:30. Okay. At this point, it is safe for you to engage and then have your stop loss maybe up here or somewhere around here. That is if you are more aggressive. But if you need to wait if you are new or you're not comfortable, it's always good to sit on your hands and wait for more information, as I did. So I waited for 9:30. What did 9:30 do? This is the candlestick for 9:30 over here. You can see this is on a 5 minute. So 9:30 opened, and we form what we call a smart money. We form SMT, or smart money time. What does this mean? It means yes, took out this high, took out the high. So that is what I wanted to see. I wanted to see a manipulation, and SMT is a form of manipulation. So where am I supposed to be positioned into? I want to trade the weaker pair, because that is the one that is most likely to deliver to the sell side, to sell side, more than the stronger pair. So how do I identify the stronger and weaker pair? The one that forms the lower low becomes the weaker pair, which was Nasdaq. So when do I engage? Once we close above the series of up close candles that gave us that SMT, once we close back up below that, that is where I can take my entries. Right there, have my stops just above that high, because I'm looking for this high not to be this becomes a protected high. Then what are my targets? Where can I target? You remember those levels that I marked, the premium high, the midpoint, the propulsion block discount low. Those are targets that you could have had as those are targets. If that was too much for you, you had this fair value gap over here. You can see this gap. So if you level those that fair value gap and divide that into maybe even 4 equal quadrants, those levels were price targets. Or a better way of doing it was, if you took this trade, depending on your entry setup or strategy, you can take a 1:2 or 1:3 risk to reward ratio. You can just enter and target 1:3 or 2R, 2R, 3R, and then close 80 or 90% of your positions at 3R or 2R, depending on your risk appetite, by the way, and how much you want to take, how much you want to risk, and then leave runners. The runners, you can have them all the way to these lows over here, but you need to understand what is the algorithm most likely going to do at this point. So at this point, I took my cells somewhere around here, and then I took my 1:2, and then I left runners. Where do I want to see price move to? We moved from an extreme discount to of the dealing range, of the parent dealing range. I need to see price come back into an extreme premium of the dealing range. I need to see price come back into an extreme discount. Where the extreme discount? What does the algorithm? Where is it most likely going to reprice to? Have this low, the fair value gap, and those levels that I just highlighted. And look at how price literally just nailed the discount low of that propulsion block. That is information, and that is not randomness. That is the algorithm doing what it has been programmed to do. So leaving a runner all the way to this lows. Think I had a runner all the way to this low, but I closed it, I think, around here. Once I saw this kind of bullish price action, so I was like, you know what, I'm cool. I've had enough. So let me just close that and move on and wait for Thursday. So that was Wednesday's trade. Beautiful trade, nice trade. So getting into Thursday, what was my bias? So Wednesday has happened. Wednesday we are done. We are good. We've taken a nice trade. Now we are getting into Thursday. Whatever happened on Wednesday will give me more information to what I want to see happen on Thursday. So going into Thursday, I only need the 4 hour for me to just figure out what has happened. So looking at how price was reacting at these levels, I can understand that we touched the premium discount, the discount low. We touched the propulsion block discount low, left this relative equal laws over here, which is characteristic. I can never stress this enough, which is characteristic of the algorithm while it's in a buy or sell program. When it gets to the 75 dealing range level, it is characteristic that it is going to generate buy side or sell side liquidity respectively, irrespective of the program it is during that time. So this, since we're in a sell program, can see how we left a relative equal laws. These are laws where we are going to be attacking at some point when we don't know. Our work as traders is just to get the information and react to that. Okay. So me looking at this, I'm telling myself that this is just generated sell side liquidity. So going into Thursday, I am still bearish. But again, I'll ask the question of before I anticipate price to go lower, I need to see price move higher first. Okay. So what is going to be an invalidation point, or what should I see price do? At this point, I can mark these two up close candles over here because this become an order block, and this is a 4 hour, so this is a higher time frame. So looking at how price was reacting to these levels over here, I tell myself that this even gives me more confirmation that we are still yet to seek sell side. But first I need to see a manipulation move to the upside. I need to see us attack buy side first in form of a manipulation. So I'm going to zoom in from this high to this low. I want to zoom in into that price action so that you can get a better understanding of what I'm saying. Okay, here we are. So we have this high to this low. This 18 is where Thursday's price action begins. So this is Wednesday. This is where we formed the week of the daily candle on Wednesday. So my bias going into Thursday is I want to see lower prices. Lower prices. That is the general idea. But before I see that movement to the downside, I need to see manipulation first. Where do I ideally want to see that manipulation first? I'm going to be looking for relative equal highs or buy side liquidity in short. So in this example, we have a prime example of equal highs. So this is why I want to see manipulation happen. Ideally, when do I need to see this happen? Ideally during London, because I'm looking for sell side, I'm looking for price to go lower. So I need to see a high formed either during London or New York, those two sessions. So when we do not get that, when we do not see that during those two sessions, now I have two options. I can either sit on my hands and wait until when I get that movement to the upside, because I'm not going to engage in any kind of short until these highs are swept. That is the general rule. I need to sit on my hands and wait for manipulation. So I can sit on my hands and wait until when that happens. Or I can take advantage and realize, okay, you see the equal highs that we have generated up right there. That is a target. That is where I know the market will most likely draw to. So I can counter trade to those equal highs, or to those to that buy side liquidity. But I need to see a setup form first for me to engage to those targeting those equal highs or buy side liquidity. So that was my thinking going into Thursday. So this dealing range, this becomes a type 1. So you look at how in a type 1 dealing range, of course, we want to see price move back into either extreme premium or extreme discount or equilibrium, depending on the bias you have for that day. So for me, since I was looking for sell side, I want to see price come back into at least equilibrium or the extreme premium of this dealing range. So what price is doing here, basically, it's rebalancing all this fair value gap over here. And yeah, it wants to move, it wants to push, the algorithm is pushing price to a premium, because if you want to make profit as a seller, you want to sell high so that you can make the most profit. You do not want to sell at this point while you could have sold at this point. So this is just the algorithm doing its thing. Okay, but for me, who is a trader, I just, whatever I've said, I need to see first manipulation before I engage. So now Going into a lower time frame or zooming in, this is now when 9:30 opened. So I did not get the confirmation during London. As you can see from this side, this is a way past London. 2 to 5 has already happened. So this is a New York opening. This is pre-New York open 8:30. So once 9:30 opened, I'm expecting that volatility driver will be the manipulation. That Judas swing will be the manipulation. But still, that does not become the manipulation. So now what do I tell myself? Okay, the 9:30 Judas swing has not given me um, the manipulation move that I need to see. So this could mean the market is not ready to move yet. So now I start to consider, can I trade that manipulation move higher? Yes, but first I need to wait for price to give me that information. So how can we trade that move higher? I just need to look at this and realize that this here are equal highs. We swept all this sell side liquidity to the left. So what does this become? This becomes what we call a type 2 dealing range, like this, where you can plot from that high to that low. There's so many other things over here that I could have talked about. Like for example, look at how the equal highs over here are literally aligning with that 50% parent dealing range level, dealing range, level. This is what we call algorithmic price delivery. Like this is why I cannot understand why people claim that the market is just random, that it is buying and there's nothing like buying and selling pressure. This is literally accuracy and efficiency to its best. But let me not deviate from my point. So I'm looking at this as a type 2 dealing range or a potential market maker buy model. So at 10 a.m., around 10 a.m., I get this kind of movement and I see that we closed above this down close candle. This to me is a change in state of delivery. This now is giving me a setup and a setup idea for maybe we want now to come and attack the buy side, the equal highs. And again, we are inside the time window that I trade, which is between 8:30 to 11:30, 12, around there. That is the AM session. So this is valid. So what do? I engage. I take a buy position over here, but low risk because this is a counter trend trade. I'm trading against my higher time frame buyer, so I need to be de-risked. So I take a trade, have my stop loss just below here, and then I'm just looking for these highs. So we get a push, but unfortunately, as the algorithm or price will have it, I was stopped out. How? Look at this. This is where I had my stop loss. So we moved and then posted a new high over here and then came back and stopped me out. So at this point, once I was stopped out, I was like, that's okay, it's cool. It was just a small loss. So let me now uh, call it a day, then come back tomorrow and figure out what is happening. What does price want to do? So looking at this price action now, this is Friday. Looking at this price action on Friday, I'm telling myself, what has price done before I hunt for a setup? What has price done already? What has price already done for me, and what information is it giving me for me to hunt for a setup today? So looking at Friday, I can see that we still have the equal highs over there. What was this high that was posted over here? This just becomes another generated buy side liquidity. This is just as the algorithm generating liquidity. So there was there's nothing new that the market is doing here for the algorithm. This is just it generating liquidity that it is going to come and attack later on when time and price align. Okay, so coming into Friday, what do I want to look for? I ask myself the same question. What did Thursday do? What is my objective? My objective is I am not going to engage in any kind of short because remember on a higher time frame I am short biased. But first, before we move lower, I need to see a move higher. So this is that point that I was trying to make. I can trade counter trend trade to the highs if the setup is clean. That is the point I'm trying to make here. So coming into Friday, I can plot my dealing range from this low to this high. No, from this high to this low, sorry. And identify that this low was formed at London. This was during London at around 2 to 5. So this is what I call London reversal, or what I've always said, profiles will give you confirmation. So if I want to see these highs get tagged, so that means I need to see, before we go up, I need to see us move down. And that movement at London is what I need to see. That is the cheat code. But the profiles are a cheat code. If you've been struggling with daily bias and maybe, yeah, daily bias and all that, you need to learn, you need to go and learn about profiles. They are a cheat code. Now we get London reversal at around 2 to 5. We get a clean change in state of delivery. What is paired with that clean change in state? We have a fair value gap. So my work going into 9:30, 8:30, 9:30 is, what has price already done? We swept liquidity. We are in this dealing range over here. We closed above the 25 dealing range level. We are now past, this is way before 9:30. So here's where 9:30 comes in. So again, before we go up, where do we need to go first? We need to attack um, sell side. So this is what we call, in a more advanced term, this is what we call turtle soup. So we need to come and sweep all this liquidity over here for those that were selling at this point. For those that were buying at this point, having very tight stop losses here, we need to come and sweep them all first. Come and again rebalance this fair value gap over here. Tap the opening price of this change in state. Look at how we literally touch the opening price over here. That is clean. And then look at the delivery after that. We now move to the upside and collect all those equal highs that we had lying over there. So I was in this trade, I took this trade and I exited at this point. I did not know, I have no idea, because again, I'm not the market maker. I have no idea that this is going to buy all this. My target was just these highs. I do not have no idea or clue that this is what is going to happen. Because if you go back in time and see how we moved, the equal highs are around here. Look at where we are at right now. So this is something else. This is more information, but this is going to be for next week. So at this point, once I was once this was hit, I was good. I closed my trades and I was like, I'm done for the week. That was an amazing week. Yeah, that was it for me. And yeah, that was those were the trades that I took this week, and they were so clean, except for the small loss on Thursday, but of which, as you can see, I already know what was happening. So there's no way you can avoid losses. All you need to do is you don't need to lose yourself as you in the process. It's not easy, by the way, and it's something I'm mastering as well, but at this point I feel like it's something very crucial for every trader to understand. You need to understand what the market is doing so that you don't lose yourself. There's nothing so detrimental to your psychology than in this thing than thinking that the market is doing something foreign. You need to understand what the market is doing. And that is why I urge, or I encourage you people to learn ICT concepts. If you cannot do that by yourself, I have a whole mentorship program for that, so you can sign up. But ICT concepts will give you the information you need to understand about why the market is doing what the market is doing. It's just not randomness. This high being posted here wasn't random. It's something that it's doing. The algorithm is generating buy side liquidity that it will come again and attack at some point. So this is what you need to understand so that your psychology can click, it can improve a little bit for you to understand that you're not the one that is wrong. It's just the market doing its thing. Okay. So enough of that. I hope this video will be informative and I hope you'll enjoy. That's it for me from this side. And thank you so much for watching, and I'll see you in the next one. Peace.